It's Stuart here again. It's Monday. It's the 24th of March, and it's the we just started the final full trading week of March. Obviously, next Monday is the 31st, the actual end of the month, end of the quarter. But many portfolios, positions, big banks I know will be wrapping up the quarter on Friday. So key week ahead. Let's have a just quick look before we dig into the data of today. Let's have a quick look of what's to come for the rest of the week. So Monday is our PMI day. We'll come back to that in a minute. We got the US PMIs in about 15 minutes or so. But hang on a minute. Let me just make that screen a bit bigger. Me a bit smaller. There we are. Hope you can see that a wee bit better. So that's Monday. It's all about PMIs. Lots of politics as ever been flying around. Over the weekend, and we got a rise in futures. The European markets have come down a tad, but US markets have ticked up on expectations. That some chatter about again, as ever, all about tariffs might not be as what's the word, as brutal as first appeared. Liberation Day, which is literally next Wednesday, isn't it? The 2nd of April. Not the 1st of April. It's April Fool's Day here in the UK. Carefully avoided the 1st of April. But anyway, 2nd of April is when all the reciprocal tariffs are supposed to click in. But lots of negotiations going on with Besson and Luknik, the Commerce and Secretaries of Responsible Business. So. Anyway, lots to come as ever. But this morning, PMI data, I'll say we'll come back to that in a minute. Tomorrow, Tuesday, a little bit quieter. Regard the PMI front, we got services later on in the week. So quiet, relative quiet Tuesday. Richmond manufacturing, new home sales. Remember the existing home sales and the home approvals last week caused a bit of a stir. The key data for Wednesday is this one here, the consumer confidence number from the Consumer Board. The Consumer Board consumer confidence is the official register of how consumers are feeling in the US. Remember, the consumer's been holding up, but there's all sorts of data showing softening in these consumer numbers. So 98 last time, 94.2 as expected on Wednesday. Watch those home sales numbers and the building permits numbers as well. Earlier in the day on tomorrow, Tuesday. So Richmond Manufacturing Index as well. Not as significant as Philly Fed in the Empire State, but still a key number that's coming out later tomorrow, Tuesday. Wednesday sees a raft of inflation data, particularly out of the UK. We've also got it's like a budget update by the finance secretary in the UK, the Chancellor of the Exchequer. So we've got CPI, PPI, and RPI as well in the UK. RPI is a bit of an old-fashioned one, but it's important for workers negotiating wage rises and landlords negotiating rent rises. So it's quite a key number. So a raft of inflation data out of the UK on Wednesday, the 26th in the morning. In the afternoon, durable goods out of the United States. We'll be live for that later on. Weekly oil inventories as ever. And then Thursday brings us the weekly claims numbers. We'll be live for that again. Remember, jobs have remained key within the US economy. And these continuing initial jobs claims numbers remain very, very positive. I'd still argue. I'm still using very, very quite openly, given that the strength of the job. So any tick down in job creation and rising unemployment would start to spark a bit more worries. So the impact of the tariffs may be taken more. So I've got a strange screen. Hopefully you can see me and hear me okay, but I've got a strange screen coming. Let's check everything's okay out here. Give me a sec. Yeah, no, looks all right. Oh, I've got no, what are you telling me it's not working? So yeah, so there we go. Sorry, where was I? Yeah, Thursday. Weekly claims and the key data that everyone will be hanging on for on Thursday is the GDP number out of the United States. Obviously, it's the fourth quarter. It's very backward looking. We're already at the end of the first quarter, so it's the final reading. See if there's been any drawdown in that final quarter of 2024. Say, yeah, it's still a it's still highlighted here as a high impact event. It's significantly less significant as far as moving markets, forex markets, or or the treasury market, the credit market, or stock markets than it used to be. But anyway, keep an eye on that on Thursday also. But really, the jobs and this obviously dual mandate the Fed have remains key. So jobs on Thursday. Friday, I've got to mention actually as well the PCE numbers as well. But Friday is the key one. We got more inflation, GDP out of the UK earlier on, inflation from Eurozone. But the key data for the week, for the month, for many, including many on the Fed, will be the PCE price index number. This one here, the core PCE price index number, comes out 12:30 GMT, Universal Standard Time, as it still is at the moment, on Friday. So that's really the key numbers. And then some more University of Michigan, their consumer sentiment and inflation expectations as well. That's been weakening quite significantly as well on Friday. So yeah, plenty to get in our teeth into on this final week of the year. As far as today's concerned, we've had generally sort of more positive than when I first glanced at it this morning. More positive numbers around the PMI data. Remember, PMI data is forward-looking, so it's it should be and is quite significant as far as moving markets, but relatively still in negative tick in Japan. We moved lower, unfortunately. Here the services number at 59.5. Across in Europe, the French numbers remain in recession area, negative contraction, but better than expected. So it's ticking up, so it's moving in the right direction. So this trend continues to move up. We're still in contraction zone in France, and still the same in Germany. So the composites just about holding over 50. Manufacturing moving forward again. Remember, we were down at 35 at one point, 34 for German manufacturing, back to 48.3, still in contraction, and services shrunk last month, and quite significantly worse than expected, 2 whole ticks worse than expected for Germany. So again, Germany services starting to wobble a wee bit, but just about holding in expansion mode. Still very, very glacial expansion in euro area. As you can see here, the overall composite number 50.4, contraction still in manufacturing, and services also at 50.4 overall. Across the English Channel, actually the best numbers of the morning have been out of the United Kingdom. Services numbers, PMI is coming at 53.2 compared to 51 last month and 51.2. So that's quite a big tick in the box and a positive tick for the existing government that's 8 months old now. But all pressure in the UK is on the budget statement on Wednesday. So we'll be analysing that on Wednesday. Lots of pressure inside her own internal party for Rachel Reeves, the Chancellor in the United Kingdom, to look to cut or raise taxes on the top few percent in the country. That's clearly not going to happen from the sort of spin that's been coming out of the government, more aligned to the previous Conservative government, with looking to cut expenditure, and a very sensitive political tightrope she's walking on that one, as well as a Labour Chancellor. But anyway, 53.2 for services, which is a good sign. Manufacturing, dire, still at 44.6. So the data gives with one hand and takes away with the other. So some of the best services numbers out of the United Kingdom, but also some of the worst. We scan through up here, some of the worst manufacturing data out of the United Kingdom as well. So very, very mixed picture in the UK. Services accounts for 88% of GDP in the UK. So It's much better that you've got a big, healthy services expansion. But obviously, we like to make stuff. All countries like to make stuff. We don't want to see manufacturing in contraction, and it's 44.6. That's not a great number. These P's here mean it's the first reading of this number, so it's the most significant. We've seen some movement in the markets according to that. So what we expect now in the United States in a couple of minutes, well, we are looking for expansion in both areas, both services at 51 of potentially 52. I've seen in some readings, and manufacturing also around about the 52 number. So let's see what this looks like for March. Obviously, the new president will take some credit for this if the numbers are good, and try and blame the previous establishment administration if they're not great. But obviously, they're now taking control of this. Obviously, the PMIs, the purchasing managers, they will have obviously some sort of about an inkling. Been tailoring their purchasing up with regard to the incoming tariffs that are imminent as well. So it'll be quite interesting to see what this data is like literally in a minute or so. So if we could have a quick look at the stock market. Stock markets are up. There's a date must have come out, 57.47 here on the S&P. Finally, we gapped up this morning on the chatter over the weekend about tariffs not being as blanket as many had thought. So we're up. If we just have a quick look at how the euro, the dollar's reacted. Dollar's been firmer this morning. Euro 108.20. And that continues to be the case. Just go back to the 5-minute chart, see how that's reacting to the data. So stronger dollar on the data. Let's just update the calendar, see what that PMI data has come out at. Remember so US numbers. Why isn't it updated? Do that again. Doesn't want to update it. Never mind. Let's look. So let me have a quick look at. So US has come in actually weaker than expected. Manufacturing has actually dipped back into contraction, but the services number, a bit like the UK, we've got this diversion in the improvements in services, quite significant. Again, another significant number there for the US, 54.3. So as usual, the US tops the PMI scores on PMI day. But the fly in the ointment is the manufacturing there under 50 into a contraction zone. Previous months had been revised high, which is positive. Obviously, the impact of on purchasing manufacturers, on purchasing managers, and the looming tariffs is being quite diverse. So 54.3 for the services number. 49.8 back into contraction. I can't show you the there isn't a graph on this for anymore. No, okay, that's not table on that, but back into contraction zone on the US. Is ours actually updated? Still hasn't updated. Oh, there we are. You are actually up to date. So US data is coming. Yeah, so it's the S&P PMIs. 49.8, 53.4 and for the composite, and 54.3 for the much more significant services. So 53.4, it's better than last time. It's continuing to trend up. So obviously the politicians received some credit for that. So we've seen our initial reaction is see here on the euro dollar is a stronger dollar. So euro that's really been sliding sideways really. Actually, I haven't said it. It's been positive this morning. This is the start of the week. This last night was around about here, isn't it? 23rd, or is it 21? Around about here. So we've been relatively positive to start the week, which is around about here last night. But we're back to the lows. We are close to the lows we tested on Friday when we actually went under the key 108 handle. So 108.12 at the moment for euro. Dollar, and you can see here on the hourly chart. Just make that. Hang on, there we are. You see that on the hourly chart. We can see we've been trending lower from these highs when we went to 109.50 back on the 18th. So we've been moving lower for a week or so here, and 108 is the big line in the sand. A breach of that level, obviously it's a big round number. You can see here on the hourly charts clustering around here. This is back at the beginning of March, 6th of March. So our peak for March has rolled over quite significantly. We're moving down and we continue to trend low. So euro dollar continues to be short. Anyway, I'll go through all the trades we had over on Friday and Thursday. I wasn't with you on Friday. I had some personal matters to attend to. But we'll update Thursday's trades and Friday's positions as well. And that our big gold position was taken out. Our stop loss at 30.20 was taken out on Friday as well. But nice, massive, big win for that gold trend. But so dollar is improving in the immediate aftermath of the data. So 108, will it hold? Still 10, 12 pips away from that currently. So look at the others. Aussie 62.88, so under 63. And again, the trend, as you saw with the euro, with the euro, the trend continues to loop low. So 62.68 was I don't know where we were, short or long now. I think we must have been short that one from the 21st. Was that short? Oh yeah, it was on Friday, wasn't it? We were short this, and it's gone against us so far today, but we're coming back at the moment. We'll see what that looks like by the end of the day. We'll see the end of day position, so there's no panic getting out on the first day or anything, but we'll see how that moves. It's moved quite 30 odd pips against us, but anyway, we're back down here. Interesting that we would need again, we're breaching through here, so Aussies at a key juncture here, 62.80 zone. I see how it's pivoting around this area, so at least get back to sort of like the entry level on Friday. This is going to continue to move down. If not, we could move away from here, but really need to break away from Friday's high, Thursdays and Fridays high, which is round about here at 63 to move up. It doesn't want to move over 63 at the moment. We're at 62.85 at the moment for the Aussie dollar. Canadian dollar 143.85. Again, very much in that sideways channel. Look at the daily time frame. Sorry about that. Still very much sort of sideways channels for the loonie and the US dollar. News from Canada over the weekend was that Mark Carney, the new Prime Minister, former Governor of the Bank of England, called a snap election for the 28th of April, as many of were anticipating he would, try to take the momentum back to the Conservatives in Canada, which are way ahead in the opinion polls. That's been cut back quite significantly now by Carney, but whether you can actually turn it into election victory, we shall see how good a politician he is compared to how good a central banker he was. But anyway, very affable guy. Let's see how he works out in the world of politics. He's caught on over the weekend. He directed his ire at Donald Trump, saying Trump wants to own us. So he's pulling together the Canadian spirit. Yes, we are an independent country. We are not the 51st state. Trump wants to dominate and wants to own us. So lots of boiling blood north of the border in the Canadians. So Looney still channel bound in this channel. You can see that nicely here on the daily chart frame. We're rotating through this very flat 50-day and 20-day moving average. No real trends on that pair. We got a low and a support area here where we were looking to go short last week, which stopped us out. I think the dollar CAD at 142.85 is our support area here in this last week of March, and we just don't want to move over the 144. I mean, 144 is all the way up here, but we're 144.50, and one up here at 144.50 is up here. Sorry, this one here, this zone through here. So not a real direction for dollar CAD there. To trade the intraday range by all means, but there's no clear trend for dollar CAD on an end of day basis. Yen is back to 150. So the trend line we plotted last week got breached on Thursday. We come back above it Friday, and we're back through it again today. So the key move today is this break back through the 20-day moving average. This will be triggering long later on tonight. If this holds here, not only are we over the 20-day moving average, we are also over the 150 area. So interesting to see where this one runs. You can see this is a longer bounce than the last bounces and last two bounces as we were coming down. So up and then down again, up and then down again. This is a bit more an extended one, so there may be some more legs in this as the rally in the yen has cooled off. This is fairly typical as well. The weaker in yen as we get towards the end of March. Remember, lots of it's the end of the financial year at the end of March for the Japanese corporate sector as well. So lots of yen gets repatriated for end of year account balances. Similarly in the UK, it's the end of the personal tax year at the first week of April, 5th of April. So similar things happen there, but it's a bit more pronounced with the big exporting country like Japan. So this is not unusual for this time of the year. But yeah, dollar, will it hold 150? That's the real line in the sand we're looking forward to for the rest of the week. For dollar yen 150, absolutely key. As I say, we were gold. We got taken out of our long position from the when did we get in? I can't remember when we got in now. It's down here somewhere, wasn't it? Yeah, the 6th of March. I can't remember when we got in. Is it the 4th of March? 71.7. Yeah, we are 29.17. It was, wasn't it? $100 plus. We banged on that one, so it's a 1,000 points. If you're looking at a points basis. For gold, obviously percentage-wise, it's about 3.5%. Still a very, very significant gain for gold trade. So a very nice position we added to it on this big candle here. We're a bit scary, but it was very positive through 3,000. And then interestingly, on Friday, we actually came back, having hit an intraday high on Thursday at 30.57. We gave up quite a lot on Friday. We took out we obviously dragged our stop loss up to be right behind the move up. But there we go. That's trend following for you. Interesting though, if I'd been, following this a bit more strictly and not sort of banging in the stop loss as close as it was, the candle still hasn't broke below the middle moving average, and that's one of the rules. One of the ways of trading this particular strategy. So again, this crossing EMA strategy here would have actually physically gone live here on the 4th. Same, is that the day we got on as well? Yeah. Yes, on the 4th. That's what we and would have come out there and then got back in here on the 11th, just a bit shy, and it would still be long because your candle hasn't actually closed below the middle moving average there if you're using this 5, 9 and 21 moving average trend following technique. So I've moved my stop loss up a bit closer. I got, we moved it to $100 gain, and then we moved it up another couple of dollars the following day, and then we taken out on Friday. So a very successful trend following. It doesn't look much on here, but there's an awful lot of pips in that one as it's gone up, but it's still very, very well bid, the gold market. So just because I got taken out on the retrace because my stop loss is quite tight to the trend, doesn't mean that that trend anything but is over. So new all-time highs, certainly not out of the question to gold. Many are talking about 30.75 before it cools. We are coming to the end of the fourth quarter. The first quarter, obviously, there'll be some balancing up. It's coming to the January and February are very strong for seasonality for gold markets. This March has also been strong as you can see here, as we've benefited from as well. So the trend remains very much in place on the gold markets. Don't get spooked out of that one if you don't need to. But if you're trading intraday, obviously use tighter stop losses and appropriate risk management. Crypto, Bitcoin's had a great day today. 87,600 now. It's a very strong day so far. It's quite a nice, strong candle there. You can see so far today for Monday. The other key thing, a bit like we saw with the yen, dollar yen, we're over a key area. We're through a 20-day moving average now. You can see it's the first time we've gone over the 20-day moving average since the big up and down days right at the beginning of the month. So 2nd of March looked like a big, strong move up, didn't it? And that was all sold off within a big engulfing candle. It took out all of the gains on the 2nd, on the 3rd. A bit of a retrace. Now we move down into this low at 76,500, and the 78,000 level was also tested at key 78,000. But since then, we started to sort of edge our way back. We had a good day here on the 19th, but still couldn't break the 20-day moving average. Last week we slid sideways. Positive day on Friday. Yesterday, Sunday, wasn't it? Because this is all day, every day. Sorry. And then currently today we are up for our highest level since back here on the 7th of March, which is start of the decline. So see where we go from here. If we hold this again, this strategy would trigger long here tonight on this particular candle, this move for Bitcoin. The other one we look at this month was Ripple, didn't we? We moved up here and are out. But again, so we got in down here. I can't remember what I got on the foot. We got hit target, then we closed it out. So this upside zone is still in play. We come back to our original target, and so 22.5858 was that top we got here at the beginning of March again, but again it looks a bit too far away at the moment. So let's just have a quick look at what else is going on. We had a look at where we were last week. I need to implode one of my other workstations are packed up last week as well, so we're getting fixed. But anyway, let me just take you back to Thursday night. This is Thursday night, where we closed out some positions. We were in negative. I haven't actually done all the sums. Should have done sums before I came out. But as of Thursday, we were quite negative, weren't we? We were at negative 350 pips, I think. At this point, that's before the gold position closed out on Friday, which took from point of view, it's 1,000 points, so it's more than compensated for that. Thursday night, I put this note up that we'd had none of my normal strategy, normal end of day positions was trading. The more aggressive position though was triggering lots and lots of potential trades on Thursday night. There was 13 of them altogether. I manually went through them, which is something I don't normally do, and the system normally just takes the position if all the boxes are ticked. Some of the boxes weren't ticked at that 13, so I ruled a couple of them out. And then there was another one that was an index which I'd ruled out because I had the DAX, the Dow, and the S&P 500 open at the time, so I didn't take that one. It's because it's not actually on trade locker, that's why I didn't take that one. Anyway, so 6 of the 13 is what I took manually. These were the positions on Thursday night. I reduced the risk quite significantly because there were so many available, because the rules are normally, if the system triggers, you take all the positions. But because I had so many index trades open, these were all Forex positions, I reduced the quantitative risk, if you like, on all these new 6 trades. So it wasn't, although it's 6.6%, it wasn't 1.1% per each of these positions. It was a composite where my system generated the risk management and the money management, came out at 6.6% of my portfolio on those 6 trades. So the 4 positions that were already open were the normal full risk positions. So there's quite a lot of relatively elevated amount of risk because there's the 4 and the 6. That's 10 positions. So it's not too bad, but it's towards the top end of how many positions I want to have open at any one time. But anyway, that was the Thursday. Friday, I say I got pulled away from the screens. I couldn't have a look, but they were still on. Obviously, the entries and stop was already filled. The stop loss and take profits were already there. Normally, I would have edited these manually first thing in the morning. I didn't. I let them run because I couldn't get to the screens, and they all ended up making profit. They all got to their profit targets and closed out at their targets, so 20, 30, 40 pips each one. So all 6 of them actually were profitable, which was a bit of a surprise, because if I'd edited them like I normally do early in the morning, and some of them would have been losing trades, certainly. Some of them I would have left on. But anyway, that's just, felt nicely for us on Friday. On Friday night, when I did get back in front of this the screens, I'd opened these positions on Friday night. I only got to Discord last night before the markets open, so you can see I've actually put this on before the markets open, so I'm not making any of this up, my friends. So last night's trade, so these are all closed, so that 6 came off, that 6% risk came back to my margin, and we bagged, I said, a few more than 6.6% on those winning trades, and these are all still open as of now. So we can have a look at these at the moment. So these are our 4 plus 2 positions from Friday night, as well as the index positions. Gold's obviously now been closed, but these 3 are still open. So let's have a look at those currently. So let's just go through this. I'm going to put this down here so I can see it and see where we are, see what's open. So let's have a look. So let's go through the indexes. So these were there's a few that are there was 2 positions open on the Dow. So it's the Dow here. So this is, can you see that? Hopefully you can. Let's get rid of, I'll make it a bit bigger. So we got in here on the 19th, and then we had an additional entry on the 19th. So we came within a smidge of actually being stopped out on this one on Friday. So we just go back to the hourly time. So that's our, so we had a half position, remember, from early in the week, and we closed some of it. That was still open. That has now been closed. That's now been closed. Its second target, and also target 1 from the first, the second entry we had on the 19th. Okay, I hope you're following this. We had 2 Dow positions open. They both come in. The first one had already hit target 1, which was here. I think we got in down here, didn't we? I think that was the entry, and that was the first target we hit here on. We hit the first day, but we certainly hit on was it Thursday? We'd hit target 1, and we'd left it on, and then Thursday we went higher again, but we then so it must be from down here. What am I talking about? Oh, anyway, I'll check the data. But anyway, there's a position and a half basically have both hit this T2, the second target zone today. So one is closed out completely, and the one from the 19th, it's basically the second target. So it's the first target from the 19th. Is that making sense? Am I making sense? Sorry, of that. So the half a position we'd opened earlier in the week, hit its first target. It's then gone on to hit its second target, which is that. So that's completely closed now. Whereas the second position we took on the 19th here, this one here, came, or both of them, because they were both open, came within pips of being closed out, stopped out on Friday. So again, we've been a bit lucky on that one, but it's then gone on to hit target today. So if you just look at see how close we came actually on Friday. I was looking at this yesterday. It was just one of those things that there we are. We were just literally within a smidge of getting taken out. It wasn't filled. I think we were 41, 20. There we are. That was our stop. Our stop loss is at 41, 420, and it got to 41 something, 20 something it was. But anyway. So luckily for us, that was just one of those times where the dice falls for you, falls in your favor. So thanks for that. Many other times, our stop loss might have just been here other times, and it would have taken us out. But there we go. Lucky old Stuart today. So Dow nicely in the money. SPX. Similar situation, but the stop loss was a bit lower here, 5599. I remember putting that on that number. We're back through our entry again. We're another one that was out of the money for a long time, because this is 17th. That's when the first one was. So 17th. You just go back to the hourly chart, daily chart. So the 17th was 19 or 18. Oh, that's right. These colored cards, but that's right. That was our original entry. So we were out of the money for quite a while, 3 or 4 days, and now we've suddenly in the money, or in the money during the end of the day. We're now negative. We came with again another smidge of getting stopped out on Friday, but the positive spin, or the market is taking from the scaled back tariff story, has taken us within a smidge of our target from the 17th. Our first time. I don't think it's actually hit that yet, has it? No, it hasn't got to it. But no, still short there. So there we go. So this might end up, a bit like that. It might turn around suddenly, turn on a 6 months if Trump suddenly says something this morning, Monday, that turns that around. But so far we've gapped higher. The futures and the stock market is actually the US stock market is obviously open now. There's still an hour between us, and yeah, still positive. So still didn't quite get to our initial target, 57, 17, 60, whatever it was. But that's another one that's in the money. The other one that's open at the moment is the DAX, which is out of the money. Again, so this one went the other way. And you can see it's had a disproportionate move. The news for positive scaling back of tariffs obviously helps Europe as well, but the Europeans said earlier in the week they weren't going to react reciprocally immediately on the 2nd of April. Have pushed it back a month, so that's weakened the DAX. We just got the daily time frame. You see, this is where we got long again. Another one came with a smidge. Our target was a new all-time high, which we didn't quite get to the following day, and then it's ever since then it's gone down. So again, there's our entry. We're actually out of the money again here from Thursday and Friday. That one might be getting close. And again, another one that came quite close to its stop loss, but it's up at the moment. So again, I might be looking to free up some of the margin on that as I take the loss on that one. As we get, obviously, I'm balancing everything for the not just the day, but the week, and obviously the month comes into play this week, and obviously it's the end of the quarter as well. So it's all about numbers and data and performance. So we'll see how that one gets closed out. Right, the more that we'll have a look at are the forex. Sorry, so the forex pairs that were open on Friday. So Aussie Swiss was the first one. And I literally haven't looked at these at all this morning. So Aussie Swiss, we were 55.30, looking for 54.90. These are wrong. So we went short here on. It's come against us, hasn't it? Stop loss 55.81. So these are from earlier in the week. This was short, so that's one is out of the money. Aussie Swiss at the moment. Aussie dollar, as we saw earlier, is also out of the money. Euro Oz was another one. We were from Friday. So Euro Oz. Euro Oz was short 71.17. That one's 71.17. That's in the money. That one. That's a short from Friday here at 72.5. Is that right? Euro 72.31. We got in it. Yeah. So we're looking for. Let's put that on here for you. I'm looking for. on 71 euro or 71, 77, 71, 77 for a quick 30 or 40 pips on that one. So it may or may not have hit that. I don't think it has. I say my system's off at the moment. It's pinged. No, we still haven't looked like it on the daily, didn't it? But we're getting there. That's our target. 71, 77. That's looking relatively positive. Euro, Oz. The next one was the pound Oz from Friday night. AUT. Intel. Pound Oz. What was this one? Just long or short? This was 23. Yeah, so we were in at 2.0578. Our stop loss is 4. We're actually looking to go long. Our target is 2.0629. Let's put that target in as well. I'll put the others in. 2.0 euro pound 2.06. I should have done this. When I put these up last night, there we are. That's our target. This is the hourly time frame. We're nowhere near that obviously at the moment, but we are actually in the money because we were. Oh, we out the money actually. We're out the money because it's opened lower. Let's put the entry in as well. The entry level on Friday night we got filled for pound Oz at 2.0579. 2.0579. So we are actually out the money on that one. Just about split for the day. Our stop loss will be down here somewhere, but that's our entry and our target. Let me just make that a note of that. That's entry from 21.3, 21.3, not 4. Okay, and that's our target. That's target 21.3. Okay, so that's sort of flat euro Oz. Cable was one again I should have closed out. But that was and euros, and there was 2 majors, wasn't it? It was sterling. What's happening here? We were filled here on Friday, and again we're out of the money as our target. We're looking to go. This was from Friday as well for cable, guys. You can see those lines there. So we're looking to get it back down to the 20-day moving average as our targets here at 21, whatever it is, 21. Sorry, 128.52 is our target. Our entry was here at 129. 14, and our stop loss is at 129.90. It's quite a long way away that stop loss, but we're out of the money on cable, and we're also out of the money on the Swiss franc. No, we're not. We're in the money, just about. We're just about in the money. So that's our stop loss on the Swiss franc from Friday. I've done some of these, not some of the others. So as ever, it's a mixture. It's never. Unlike on Thursday, where all 6 hit targets, some are in money, some are out of the money. But the index is the main money makers today. Obviously, we had that big bill win for gold, which brought up what was a losing week at one point. We were down, as I say, we were down 350 points on Thursday last week, but we finished the week positive because of that one big trade. I mean, we knew that was coming for a while, and now the indexes are in profit. And it looks like we're going to be good for March again. But I'll update the data shortly, my friends. Sorry, this is what I've just been talking about. This is what we've just been looking at. We've just been doing these Friday night updates of these positions here. And I say, okay, check it. If you don't believe me, check these. But these did all hit their targets on Friday, these Thursday night trades. So let's see what we go. That's Wilson Ben. I hope Wilson Ben, you're here. Where's strategies. There we are. So there'll be some more tonight if there are indeed any trades. I haven't actually got my system open. I'm going to have to go and restart my workstation, my trading workstation. So I'll leave you for now, my friends. Hope you've had a good Monday. Remember, if you're not with us, why not? We've got the website updated over the weekend. Just go back to. Oh, I can't see the bit. There we are. So there's been some tweaks to the website. Let's go back to. Just go back to the main page. Go back to proptrader.com. There we are. Got some nice little additions like this. Well done. This looks really nice. Join our webinars and live sessions on Discord and our Twitter X channels. Remember, 25% for new clients and this customer success channels. Some of these are quite small numbers, somebody said, but I mean, the full point is people are trading with us. People are going through either the one step or the two step. They're either using big accounts or small accounts, but they're making money. That's the main thing. They're getting money out, and that's what you can do. That's what we're here for. We're here to help you move. We keep it simple and transparent, as it says there on the website. And it's all about risk management. So keep the risk management in check. Always be aware of it. Been some tweaks here. Obviously, if you're only going to do one step, you need a higher profit target. The daily drawdown is a bit tighter than it is on a two-step challenge, but you've only got one step. You've only got to prove yourself once rather than twice. Many people get attracted to that, but the parameters are a bit tighter. If we go to a standard two-phase step, we've only got you only need an 8% profit target. With 5% daily drawdown, 10% total drawdown, you do it again with a lower target on the second step, 5%. So it's phasing you in, and then you can up to 90% of winning trades. The funds can be shared with you. Obviously, you get the refund of the challenge that you buy. And the other great thing as well, my friends, is that there's always some sort of offer available. So if you wanted to buy a standard, I would say, I can't tell you what to do, but the 25, 50,000 there, they are the most popular for a reason, because you've got bigger margins to play with. $175. But if you put in a coupon code, put in SC25, that gives you a 25% discount off the 175, so it comes in at less than $150. You're successful in either your first stage or your second stage. You get that fund back anyway. So what have you got to lose other than a few $100? But it gets you, the ability to trade with a big account, a proper $25,000 account. And then once you get through there, as it says here, you can then scale up to the $200,000 accounts as well. So it's all about process. It's all about good procedure, and that's what successful traders have. It's not about one big winning trade, lots of small losing trades, keeping on top of it, lots of little winning trades as well. It all adds up eventually, and it's finding the process, and you get a bit of an instinct in it as well. Tomorrow, I'm going to be running a webinar or a little education session on these systems, on these algo systems, on these mechanical systems, on these EAs, and how to approach creating a system, what makes a good system, what's worked for me, what didn't work for me, what's worked for people and clients and colleagues I've known around the world. All that tomorrow from 2 o'clock. We'll be looking at algos and systematic trading. That's the key thing. Be systematic, process as much as possible, automate as much as possible, and take the emotion out of it. And that's what automation does. It doesn't take it all out completely, obviously, but anyway, I'm stealing my thunder from tomorrow. But more on that tomorrow. Trade carefully, be safe, my friends. Let me just leave you with see where how the dollar is holding up with the reaction to that mixed PMI data. It's still here. This is the euro on the daily time frame, so it's still holding 108. we just go back to our 5-minute trading time frame. So the initial reaction was to the downside. It's bought back more or less 70% of that decline. We did go under 108. Clearly, there's buyers. Euro dollar at 108 because we turned around within 5 minutes. We were back over 108. But the trend, as you can see here, even on the 5 minutes, it remains to the downside and has been since this top at 108.50 back last week. This today, what are we talking about? It's 15 minutes, but we've got the 4-hour chart. See what I'm talking about. The downtrend has been, in play for all of the second half of March, hasn't it? We went to 109.50, not 108.50, 109.50 here at the middle of March. So we've been down here, and again, your 4-hour trader has been under these key moving averages since the 20th. So they'll be looking to push into this breach, the 108 area, but 108 is holding so far from the second test we've had of it. So perhaps have another test as the month comes to an end. But as you can see here, as we were moving up really strongly, it became quite a significant resistance area for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days before it breached it. The move down has been less significant than the move up. So this might hold for a wee bit longer than the 10 days it did take to break on the way to the upside. But there we go. That's markets for you. Take care, friends. See you tomorrow for systematic and algo trading, and plenty of data to come this week. So take care, be good, and see you tomorrow. All the best. Bye-bye.